Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for our Thursday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a lovely Denver, Colorado this morning. Thank you all for joining me today on this solo version of our Trader Talk session. I am joined by Brent Moores in the chat today. Say hey to Brent. He'll get to comments and questions I'm unable to get to for you all today, but we got plenty to cover. I've got a multitude of upgrades and downgrades, some intriguing downgrades on a couple of these actually, and lots to look at as it relates to the broader market following yesterday's FOMC decision to cut rates by 25 basis points, as we've been alluding for the better part of the last 2+ weeks here. So we're going to look at exactly how the market has shaped up today following that announcement and see what we can learn about what might be coming between now and the end of the year. So if you're not already doing so, make sure you're following Brent and me on X, Brent Moores CS, Kevin Horner CS, the best place to meet up with us coaches when we aren't hosting classes for you here on the channel. Now, we're going to get to disclosures. I'll just remind you, make sure you're subscribed to the Trader Talks page on YouTube. Make sure you're getting all that you can from us. Let's get to those disclosures, everybody. Please remember that our conversation here is only for your information and your education. We do not make recommendations. We do not endorse a specific approach to trading the market. We do, however, in these classes, discuss technical analysis. And as we do that, we simply remind you of the concepts, strategies, ideas, and tenets of technical analysis, things that traders might incorporate in their own planning and process for trading the market. But we do discourage you from utilizing only technical analysis to base your decisions. Trading in the market, investing in the market is really a gigantic puzzle, and it's incumbent on us as traders to put as many pieces together as we base those decisions. We do not like to make those decisions off of just one single thing. All right, now as it relates to our session here today, we will follow our traditional agenda. Now, in this area, what we do here is more of an analysis of the broader market. So we will start with a review of our biggest indices. We'll look at the S&P 500, the NASDAQ 100, the Russell 2000. We'll certainly check in on the semiconductors and obviously a look at yields, rates, etc., how things are moving following yesterday's announcement and what impact it might have had on some of our sectors in the market before we move into stocks in the news. So with that, let's look at the SPX here today. Yesterday, I was lucky enough to have Rachel Deshelle on with me, and we talked about the price action here, basically not just moving out of our the pullback session here, moving for the last 2 weeks to the upside, holding higher lows. Even yesterday, intraday, you'll notice that our low of the day was the lowest low we'd seen in about the last week, but we bounced off of it intraday following the announcement and had a nice finish there with a filled in green candle, essentially closing pretty darn close to our intraday peak in the SPX. And so for a lot of traders, everything that Rachel and I covered for you yesterday is going to stand for the short term here. Yes, we do have lower highs in the RSI. It's not ideal, but we're still in a bit of a choppy market, still in a bit of a sideways and consolidation, if you will. Haven't moved to new highs, so we're not shocked that the RSI isn't moving in advance. The RSI doesn't do a really good job of forecasting what might be coming. It does a better job of confirming the trend that we are watching. So if we do in fact pop to new highs for confirmatory stance, we would like to see the RSI moving its way through overbought conditions over the 70 line. But right now, being that we aren't making new highs just yet, we are in the middle of yesterday's candle, in the middle of the range essentially there. So trying to get a feel for today. There's a decent chance that today's price action will be one of those harami days, a day fully engulfed by yesterday's price action. So all of today's price action, if our candle today can be fit with inside of yesterday's candle, we would call today a harami And it's not a terrible scenario following a nice candle. We could certainly get outside of this if we can trade above the high of yesterday. Then I think traders are going to target all-time highs, which are in the neighborhood of 69.20. And certainly I've heard some discussion about the potential to get up to that 7,000 ledge. Nice round figure there on a 1,000-point basis. And don't never lose sight of the fact that round figures, especially on the SPX, seem to carry a little bit of weight. Now, if you want to see how we acted yesterday with reaction to the Fed decision, I'm kicking us on into the 5-minute bars, and you can see that yesterday at noon Eastern, noon Mountain, 2 Eastern is when we got going here, and the candles were pretty much just sideways for the morning, as you can see, and then the announcement hits, and we've got a little bit of volatility unwinding, but we basically held that 20-period exponential moving average throughout the morning and into the, following that after the 2 p.m. So for the final 2 hours, basically just maintained our bullish and upward trajectory. Now, today we have opened below our pivot. What we want to see, of course, can we get above the pivot? Can we get above our 20-period exponential moving average and begin the short-term trend once more? Right now, being that we have gapped below the pivot, we've got a little bit of work to do at the short-term viewpoint. So would like to see that turn. As you can see, we've moved from red to green, so we are trading above our open at this point. Let's peek in on our NASDAQ 100. We're off about 0.75% here. The NASDAQ pulling back a bit, and it's likely tied to some look at Oracle this morning, which we'll check on a little later. But tech kind of taking it a little bit on the chin. Oracle's commentary didn't leave us feeling fantastic. So technically, when we see what's happening as I zoom in here, you'll see that that banner of resistance held to the immediate future. We'll see if that maintains. I noted the tails there, 3 or 4 tails in the last week at resistance, and we're really close to all-time highs, but we obviously got to get into this gap zone before we can make our ascent into those all-time highs. So we're in a pause situation at the moment. Nonetheless, though, we are still making these nice and slightly higher lows along the way. So, this is a bit of a grind here of late. I can still call out the fact that we've got that RSI not necessarily telling us that things are ready to reverse not telling us that things are as bullish as we want them to be in the near run here, but we're certainly doing okay because we are not falling dramatically. We haven't seen big red candles to the downside. We've basically maintained levels that are important since the essential break of what I've been monitoring. I always like to keep a close eye on those downtrend lines, those pullback lines, of course. If you choose to draw them in, just notice that it's basically been an upward bias since the break of the diagonal downtrend line. That is not uncommon at all. So give that a notation there. We'll see if that rolls forward, but when I pay attention just on the sector basis, I'm just going to highlight it real quick before we move in there later. The tech is off 1.3 as a sector here, 1.3%. So we are getting a little bit of weakness in NASDAQ 100. Now, what about our small caps? Here we got the nice big move yesterday. As you can see, this one moved through our levels. I had a line drawn in here right at those tails over the last couple of months here, and we cleared it with yesterday's price action and got a nice green candle there today. So this is looking fairly strong, and we can of course remind ourselves as to why that likely is. It's likely tied to the fact that lower yields are going to benefit our smaller cap companies a bit more than some of our others. So this is a nice development in this way. If we looked at this on a intra-period chart, we'll start with that. You can see the price action through yesterday as we got the news hit. Notification at noon Mountain, 2 Eastern. There you go. Held our 20-period exponential, and now we've basically got thrown right back to it and for a support test intra-period here, and then off we go. So this is a nice development for small caps, for small cap traders, and for the index itself, let's take a look at it on a longer term basis. And my goodness, the continuation opportunity here could be substantial. So let's not fight against what we see, and yet at the same time ensure that if we are taking our opportunities and trading these to the upside, well, we've got to be sure that we are managing ourselves along the way. So make certain that you're stepping into your positions with what you determine to be a comfortable amount of money, and further, that you are establishing your exit strategy should things change. You know, I say should things change. What that means to me is that we should have an exit strategy to the downside, levels under which we would like to maybe tighten up our long positions, that is to say build cash and maybe hopefully take profits, but ultimately have those levels stated, and further make sure that you're doing so maybe not so much tied to intraday price action, but rather closing price action on a day-to-day basis, and if you're a longer term investor, perhaps a closing basis on a week-to-week basis. You'll notice here in the Russell, everybody, as I zoom in, my green 20-week exponential, or excuse me, simple moving average in here has been supportive. But this is a candle that explains exactly why we want to pay attention to closes on a candle, on a chart, rather than intraday, or in this case, intra-week. If we caught this candle at the weakest part of the week, well, guess what? That candle would look a lot like this one here, this super big red filled in candle. And you're going to say, boy, the best case scenario is that we've got horizontal support in here, right? And you'd be right. You would have been correct if you'd called that out. But at the same time, if you're looking at this intra-week, a filled in massive red candle down to a potential zone of support, how many of you, ask yourself, how many of you would be comfortable buying up the Russell 2000 in a massive red filled in candle, breaking a 20-week moving average that it hadn't broken to the downside in quite a while? We've been above it basically since June 2. And here, this was the week of 11/17. So you're basically looking at what? 4 months, 4+ months of just hanging in there. So if you tried to make a decision on Tuesday or Wednesday of this week, you would have made, in all likelihood, the wrong decision, unfortunately, because what has happened since then has been a massive snapback, and the Russell is now up about a 12% move from those lows. Okay, so you got exactly. That's exactly right, NVO. BJ, you're at least you're thinking about it the way that I would. When I looked at this, and this candle's filled in and red and gross, and you're below the major moving average that had been providing support, you would have made a calculated move, but it would have been perhaps the wrong one. At least in hindsight, we can say that. Obviously, it's one of my favorite things about technical analysis. Since it's always in hindsight, it's really easy to be right about what has already happened. But I think this illustrates precisely why, whether we are talking about a daily chart, weekly chart, or intra-period chart, allow the closing values to carry a bit more weight, right? This one was certainly a bit of a heads up. Nice long tail. Everything changed at support, and then we finished favorably. So we'll see how that plays out. But this has been a 1, 2, 3 beautiful green candles to the upside. And then I'll just leave you with this. Obviously, this looks great at this point. But if we give back this move in the Russell, what if this week this candle is not green at the close tomorrow? What if it's the inverse of this? What if it looks more like a shooting star with this really lengthy line? What if it looks like this instead? We're going to feel a lot different about it, right? So even though it looks good this morning, 15 minutes into the market day following the announcement of the FOMC decision, this could look a little different at the close tomorrow. Okay, so that's all I'm saying. Let's pay attention to closing values. Okay, all right, let's move on. How about our semis? Semis pulling back here. So I mentioned the news story on as it related to Oracle there, and Oracle a little bit taking it on the chin. Well, that's extended or moved its way toward NVIDIA and semiconductors broadly. So we are seeing a 2% pullback here. Now, to the moment, we may not be terribly concerned about this. Let's zoom in to what's been going on of late. The level that I drew in yesterday was pretty much right here, and it looked great with our move yesterday, right? Cleaning it to the upside and closing at a new all-time high. That's fantastic. But today's weakness is telling us a little bit of something. So if I pull that line off and just pay attention to what we've done since this gap move, maybe this becomes an important ledge. I'll draw it in here, but let's go back into something like maybe not the 5-minute, but what about the hourly bars? Okay, so there's my same white line, all right? And so on the way up, everybody, look at how that 20-period exponential moving average has been providing support for a lot of this. This goes back when we recaptured it right in this vicinity. This was November 24, okay? Now this looks like a really short-term chart, but November 24, we're still talking 2 weeks, right? So we're looking at a 2-week rally to the upside, and today's open has violated it. So as I have made a point here from a technical standpoint on numerous occasions, one of the things that traders will look to when the trend starts to pause, we will commonly break the trending moving average as we have today and look to develop or find support at a level of horizontal price action. That's what that white line represents, the action of essentially the last 5 to 6 sessions. If we can hold that line, I think a lot of traders are going to tell you that the opportunity remains more likely to the upside in the short run than to the downside. However, under that white line, that's going to change. And the probability factors of more weakness would increase if we trade below that white line. So you have to have these levels noted, stated, and at least for yourself, determine, hey, what am I going to do if we move through this level to the downside? If we get to that level and the selling stops, am I going to deploy money? Am I going to add money in there because the selling has stopped and hinted at an indication of support having been tested? And if it's been tested and held, for a lot of traders, that becomes a comfortable place to deploy new money. Okay, now that's assuming they want to trade that way in the short term. So I like what you said there, Alicia. Let the price talk. Absolutely right. I think price action matters to the majority of traders, but more important than price action is maybe trying to understand how is the broader market going to act if we move through those ever important price levels. What are those levels and which ones matter most to you as a trader? Are you the very short-term trader? Are you the very long-term trader? Only an investor, you look at your account once a week or once a couple times a month. All of those concepts need to be part of your overall plan as it relates to how you're going to handle the market. So as you can see, semis dropping into this 7,300 level. Let's see how this goes. We're off another 0.25% just in the last 2-3 minutes of me speaking about it. Maybe we should just move away from the semis so we can eliminate that concern. All right, moving back in. Let's talk briefly about the transports, which did get a breakout, moving to new highs here in the short run. This is not a terrible development. We've been waiting for this. It is not just the sector itself or the industry group. There are a couple of leaders and a couple of laggers. Now remember, transports as it relates to the S&P 500, let's use my visualize, we'll use my heat map, and we're going to open up industrials. And then I'm just going to highlight some of these key transportation areas, right? So aerospace and defense is kind of limited in scope, but not as limited as something like ground transportation. And even still, in ground transport, understand what we're looking at within the S&P 500, right? You've got 3 stocks in the S&P for the rails. You've got your Uber as a passenger viewpoint, right? And then you've got your truckers. So you can look at your truckers as, just a couple of the biggest ones if you'd like, and your rails is the same. You can also incorporate those Dow Jones indices that I like to highlight here in this class. So let's do that. Let's use $DWC for truckers. What do you think it is? It's real simple, believe it or not. How about TRK? So DWC, TRK, there is your trucker index moving through what was an area, a band of resistance. Let's update that line to now being a support line. So hopefully what we're seeing is a very clear bottoming action that has now become potentially a new uptrend. Notice down here, we've got all the major moving averages sloping upward. You've got your 20 and your 50 trying to work, already working their way through the 200. So we've got the so-called golden cross in development. We've got an RSI at the highest level we've seen in 52 weeks at least, probably longer. So truckers really improving here in the SPX. So and in broadly, I should say, because this is the entirety of the U.S. trucker, regardless of size. And we can say the same thing about rail. I know this one will shock you too. How about DWC RAI? I mean, come on. So they're working to help us out, everybody. They're not trying to make it hard to locate. Now, rail stocks, bit of a top here. We'll see if this can collectively move through this space, through this resistance band. But this is a bit of a rangy price action, you would say, right? I mean, we see that rails got questionable with everything here in the late fall. Right, or early fall, I should say, late summer into mid-September. But we've basically been, kind of rangy since then. So we've got established zone. And I think if we pulled this back into a weekly, well, I should probably extend this to the left because there appears to be a fair bit of horizontal resistance at this level historically. So really would be great to pop the rail stocks through this collectively. So I think to a certain extent, that's a perfectly appropriate comment there. Yes, could it be seasonally related? It could be, but the broader view here might just be that it is collectively a positive as we continue to move stuff across the country. That's not a negative. That's certainly a win. We're going to look at, it's a little messy. I won't argue with you, Carol, but we know there's a very important level here. In fact, I'm going to go ahead and snap that as red because if we can break through this, it could be a substantial move on the trucks. Now, some traders will tell you, hey, I'm not going to look at that, or I'm not going to even assume a breakout because I've got an RSI that is divergent. So we are at the same price we were back here, and our RSI is lower. So the expectation may not be for a breakthrough. It might be for a pause as opposed to anything else. So keep that in mind. And then I did want to just highlight a couple here real quick. Like I said, Lyft and Uber, these charts are not as good as they once were. Here's Lyft hanging out at a potential area of support. That white line is representative of historical level. Now you could see on the weekly, this is kind of an important spot. I might need to push this line down to capture the lows of the last couple of months in here. This might be a more appropriate support level for you as it relates to Lyft. Just something to keep an eye on there. Oops, I meant to push that down. Here we go. There we are. And then notice that green 20-week upsloping moving average. That might be the one to monitor in here. So, there's a huge candle on Lyft that dropped it down. And now that took it way lower, obviously. And we've now gotten through this ever important level. So maybe there's something to be watching on Lyft. But let's shift over to Uber real fast. And then I'll, so something similar, right? Look at that. Oh, I guess I was delayed. Excuse me. Uber looks a little different. So it had been on a wonderful rally, but well, this is a little bit interesting, and I'll tell you all the time, you've heard me say it, we need to look at our charts over multiple windows of time. This one on the weekly kind of stands out, doesn't it? This level that we've fallen to, the fact that we're below the 20-week for the last 4 doesn't make a lot of traders feel very good, I'm sure. But this chart on the weekly looks a lot better than it does on the daily here, as you can see. Rally was into the 50-day moving average until just yesterday, 2 days prior, I guess it would have been Tuesday, had this huge candle to the downside. Now we are at support. Let's go ahead and cover that as green, just so we can. I love making all those lines the right color. It just helps me think about things a little more quickly when I'm doing my analysis. So green lines, support, red lines, resistance, and so on. It just makes it a little easier. But this rally into the 50-day that failed right here was actually tied to news on Amazon, I believe, at the time, as Amazon entering into some of the food delivery space, and it hit Uber and Instacart and a few others as well. So, that are doing some of these delivery stuff. So notable there. All right, now we are selling a little more, everybody. You're calling it out. I see that. NASDAQ off about 1.5%, and the S&P 0.75%. VIX is elevating a little bit. Let's take a look at our 10-year yield here, which has retreated. So we got the pullback in yields that we were looking for, everybody. We talked just yesterday about how we came into that ledge. Sure enough, we've been pushed lower now following the announcement of the yield decision. So from a standpoint of relationship to the broader market, this is a good thing. So we like those yields coming lower. If the yields get back below my downtrend line, that's going to be even better. And we'll see if we've, have our lowest low in the short run here on yields. But obviously that remains to be seen. The other area that I wanted to touch on quickly was with regard to the U.S. dollar, which is now trading at its lowest that we have seen this year, I think. Let me get to it. Nope, not the low of the year, but certainly making an encroachment on, some levels that we hadn't seen in a while. So, as the U.S. dollar weakens, that's good for our larger multinational companies that do business outside of the United States, of course. So that's going to assist us a bit further. We have had a pretty healthy move in the dollar over the last year, as you can see. When we were way higher, we were 10% higher not that long ago. Now that we'd rallied the dollar into resistance and rolled over, the expectation might very well be for at least matching lows down here. Let me just extend my line. We'll take it out to this week, 12th. So there's your potential level on the dollar. If we get down there, you would expect a continued move in the dollar to kind of buoy the overall broader indices here. That's not a negative for our equities. We would take that to be perfectly within reason and fine for us. And as you can see yesterday, when we got going on the announcement, here's what the dollar was doing at the time of the announcement. So at noon Mountain, right here, basically, a little bit of volatility, choppiness, pop to the upside. We basically reset the trades is what it looks like and moved lower. So a bit of a continuation there. Now, I mentioned tech, and a lot of you are already commenting. Yeah, tech selling off a little bit here. We have retreated to the 50. In fact, we've broken the 50 on the tech sector. We are now sitting below it, potentially coming into the 20-day. But let's talk about what else we're seeing and from tech. Why are we getting this from tech today? So I mentioned Oracle off the jump. Oracle has been, let's see, do I have downgrades or just, no, I don't have downgrades officially on Oracle, but I do have price target adjustments on Oracle. So here's what I'm going to do. I'm going to open up my news and let's put Oracle in the chart. So here's a quick look at the chart of Oracle, which basically opened at a level that had been important here for a bit, right? We have a gap level following this earnings from June. And that gap ledge has provided support, or at least it did a couple of weeks ago. We bounced on it. Now we're sitting right on it once more. So let's call it green. Let's make the assertion that it should hold up for some semblance of support. So they had their announcement there yesterday after the bell. And you can see I've got, like I said, I don't have a whole lot of changes to ratings. But the thing that stands out on this one, everybody, was the excellent and so excited and exuberant optimism following their September report, where the stock opened way higher. We were talking about 300, 340, etc. Look at the move we've made here to this level now. This stock is off 45%, an unbelievable move. If somebody bought this up here at 345.72 And if they held those shares, they're not feeling all that fantastic about it. So KeyBank lowered the price target on Oracle to 300. It had been at 350. They maintain an overweight rating, excuse me. Additionally, Piper Sandler lowered the firm target to 290 from 380 on lower estimates and multiple factors, including an increased execution risk. They maintain their overweight rating. Citi analysts lowered the target to 370 from 375, Bank of America to 300 from 368, and finally Bernstein lowered to 339 from 364. Now, this is, as a relationship basis, having an impact, yes, on NVIDIA. And you're going to see it directly with today's move. NVIDIA off nearly 4%. So let me just see if I've got a specific headline. I don't have a specific headline on NVIDIA. So let's just, I'll highlight there are headlines a galore here, but it is tied largely to Oracle's announcement here. And that's why we're seeing what's going on with semis broadly. So now this is an intriguing level for the big boy here, NVIDIA, falling through the 20 moving average again. So if I zoomed in to the range, you know, there's this 20 in orange, and we were above it for a day and a half, 2 days. You know, we rallied into the 50-day, but ultimately we're back into this range. And so, you know, at this point, you know, I'm sure there are traders out there thinking 165 is in play. Obviously, if we've missed the opportunity to lighten up our position, some traders might lighten up, not excited about the opportunity presented to maybe trade as low as 165 again. There's definitely going to be some consternation in the market here, but ultimately the change in the market, or not the change so much as the broadening out of things, I would suggest. You know, the move we've seen of late has been a little bit more in other areas of the market. Yes, in the last week, we've seen tech doing well, today notwithstanding. But some of those other areas that I talked about with Rachel yesterday, you know, your industrials, your financials, those are the ones that have been kind of providing at least some insight, and healthcare, of course, some insights as to where other money might be flowing a little bit if it is moving out of tech. Now, if we're going to talk about NVIDIA from a little bit more of, you know, like this, just this price action here where we made this low, this kind of had this bear flag resemblance, or rising wedge. Rising wedge into resistance is not terribly bullish. And of course, with today's action breaking it, this is leading traders probably take a little bit off if they've been waiting to do so. Again, you know, we can't tell you what actions to take. What we can remind you of is why we give thought to this in advance. Yeah, I would have been feeling as optimistic as you would have been just on the 8th here as we tested the 50-day moving average, and then things change. Price action dictates our decisions. So traders, make certain that you're giving yourself a plan and working to stick to that plan as best we can. That's really the thing that matters the most to us. Can we adhere to a plan that'll give us comfort in the overall market? So NVIDIA, not a great move here today, and certainly a little bit short-term concerning from a technical aspect, I suppose. It'd be great if we could hold up to this level. Is there a little bit of support in here? We've certainly used this ledge at around 176, 177 before and bounced off of it before, but it's got some work to do today specifically. So that's probably leading us, you know, to the reasoning why we're seeing some of the struggle here in tech today. I was looking for any other. Oh, there's one that's downgraded today that was really hot yesterday. So I'm going to bring up GE Vernova. So yesterday, GEV had broken to the upside, had an amazing rally day. Now today, And yesterday was, of course, accompanied by a number of upgrades with GEV. Now, today there was a downgrade from Seaport Research, downgrading the stock to neutral, had been at buy. They did not assign a price target on GEV. Now, GEV itself did significantly raise their targets out to 2028 due to power and electrification momentum, expanded their repurchase program. They kicked it up from $6 billion to $10 billion, so they increased it by $4 billion, 66%, and they doubled their regular quarterly dividend. But Seaport now thinks that the company is fairly valued as they focus on the 2 to 3 year window, 26 through 28. So selling off a little bit. The area of import will likely be the gap zone here. What is the low of the gap? Well, the low of the gap was 679. So that's going to give traders something to eyeball in the near run here. Can it hold the gap wedge? Today, thus far, the low of the day hasn't come to it. I mean, excuse me, there's that line. I got two lines in there. Oh, yeah, there's my downtrend line that we broke, and then the gap zone. So the upper level here, let's call that one green. That way it'll stand out for me. So here, that should change to green. Ultimately, that level matters, right? That's 6-7. There it is. I got a little bit of lag going this morning, as you can see. But yeah, low of the day, the important spot, right? So let's see if GEV sticks with it there. That'll be important, because what you want to do when a gap move like this, especially a gap to new all-time highs, is hold the gap. And again, a good example of why we want to hold the gap is Oracle. Because when you don't hold the gap, stuff changes rather quickly, right? So just as a reminder there. Okay, I had mentioned earlier that we'd had some other upgrades and downgrades. We talked a little bit about the truckers. JB Hunt is one of those truckers, and they got an upgrade overnight. So Deutsche Bank analysts upgrading JB Hunt to buy, and after had previously been a hold. New target here, price target is 227. Again, I'll remind you, price targets, whether they're analysts or measured move price targets, are never guarantees to be achieved. Deutsche Bank analysts increased their 2027 earnings estimates for JB Hunt, and they see that JB Hunt's, let's see, is that intermodal? Okay, their intermodal division returns to double-digit margins, and the company outgrowing the market. I'll point this out. If 227 is to be achieved, everybody, that's about a 10+%, maybe a 12% premium to where we are. And then again, I'm going to point out one other instance of technical trading, right? What do we like to see? We like to see stocks moving through levels of resistance. My band in here at 170 was my resistance zone. And since we've done that, we've taken off. That thing has gone up 33 points from 170, about a 20% rally. That 20-day moving average, if you want to manage the trend, is too slow. I mean, you'd have to give up 26 points to find the 20-day moving average. Let's change it to a 10-day. Now, that looks a lot better, doesn't it? 10-day moving average, coincident with an approximation of support, horizontal support, maybe these prior highs, for example. So that could be intriguing for some traders. Some traders would just say, I don't want to give back much of this at all. And they'd say, yeah, instead of that ledge at 191, Kev, how about the low of today? What about 199? Why wouldn't I go with that? And some of you might even say, well, at under 199, I'll sell 10% or 20% of what I've got, because the stock has rallied so fantastically. I bought it when it tested support, and suddenly I'm up 28%. Let's work to not give that back, okay? So great move there on JB Hunt today. Another upgrade, now this one not in the trucking space, is Unity. So Unity, if I get the chart up here, was upgraded at BTIG and at Piper Sandler. Piper Sandler to overweight and BTIG to buy from neutral. Piper Sandler put the target at 59 and BTIG puts it at 60. Again, this one looking a little bit intriguing from the technical levels, right? Moving through a band of former resistance, now potential support for you, and trending upward. But again, that 20-day moving average, perhaps too slow. Here's the 10-day on it. At least the 10-day is equal to the breakout level now. But this kind of looks like a lovely little cup and handle, very tight, tiny cup or handle to it at least. You know, the handle is very limited in scope, only about 3 days, and then the breakout. So, you know, some traders might look at this as a kind of range move, right? So just evaluating the levels and say, all right, well, this range was, call it 34 to 46. We had about a 12-point approximation. And if we can add 12 then to the top of 46, we might target 58 from that measured move calculation. Doesn't mean we have to get there, but it sure would be a great way to see that develop. Let's take a quick look at that one on the weekly. I'm going to have to extend my green line, everybody. Check this out. Seems to have caught some other areas of important resistance previous. So if this is a good break, man, we might be in the midst of a bit of a move. What did I just say about 48? What did we talk? Let's go back to that. We said we have a 12-point ledge. So from 46, we could add 12 to it. That would give us 58. And then let's just see where 58 resides. That's almost right to this last peak we had back in the summer of 22. So things are dramatically improving for Unity software here. That's pretty intriguing as well. I saw a question in the chat about SpaceX. Yeah, I read something about the potential for SpaceX going public in the 2026 year. Now, interestingly, you can't really do a lot with SpaceX in the interim, right? Some traders might think they want to pick up shares of Tesla as a way to participate. Tesla has been moving to the upside a bit itself of late. This is not the Tesla chart here. It should change in just a second, I believe. Well, maybe it has happened. Holy cow, that looks so much like what I was the last one. So here you go. Similar in scope. This is not Tesla. Why won't this change? There it is. Okay. So one thought would have been to trade Tesla, right, as it relates to SpaceX. But the one that has been moving of late as it relates is not Tesla, but rather EchoStar, formerly Dish Network. So SATS is the symbol here. And as I understand it, Dish Network, EchoStar has taken on a fair bit of the SpaceX business. And you're going to see in the form of the chart here that there's been a bit of speculation in this one, likely or potentially tied to the SpaceX news. So notice the volume down here, notice the breakout, and a pretty healthy move just in the last 5 sessions. So if we looked at the low from here, the low on the 5th was 74. And here we are trading at 109 or so, only about a 45, 47% move. So pretty fantastic jump in the EchoStar chart. And, you know, after a flagpole like that, that's just straight up and vertical, a lot of traders are going to start looking for a pause in the rally up here. And if you've been lucky enough to be trading this one, which does have a nice look, I mean, we're talking about just the visuals on this. This looks like a perfectly appropriate short-term pullback after a pop to the upside. Lovely breakout, but this is the kind of action you're looking for now that we've made this 2-candle move to the upside. Maybe a third week, I suppose, is a possibility, but ultimately, after such a substantial move, you're going to need to see some semblance of consolidation in here. Haven't seen it just yet, though. That is one heck of a strong move on EchoStar. And I didn't expect to talk about EchoStar today, but I wanted to answer that question for you as it relates, because you'd asked about SpaceX specifically, and that was something I had noted. So definitely wanted to answer that one. Let me just take one more look. Okay, how about one more downgrade on a company in the healthcare space? So first of all, let's quickly look at healthcare. Okay, so healthcare pulled back, aggressive pullback, right to support. Holy cow, look at how beautiful that was, everybody. I think it was just yesterday. I was talking about the potential for the bounce there, coincident with the 50-day moving average. And so healthcare is moving off of a appropriate throwback after a breakout to the former resistance, now potential support. Rising 50-day moving average, so that looks favorable, at least in the near run. We'll see if that trend continues. But the move today was in Intuitive Surgical, ISRG, and this is on a downgrade. So Citi downgraded ISRG to neutral from buy, new price target at 635. That is down slightly from 650. The firm adjusting ratings and targets in this sector, specifically medical technology, for their 2026 outlook. The group is bouncing off its lows. There is further upside potential in 2026, according to the analysts. But the Citigroup does believe that the S&P Equipment and Supplies Index remains undervalued and underappreciated. Excuse me. But what you're seeing here is a big move off of lows, and as such, I think the company is simply saying, hey, they've made a nice 35% move to the upside. We find them to be perhaps more in line with where they ought to be. So back to neutral from buy, hence the shift here today in Intuitive Surgical. Okay, we are going to have to wrap it there, everybody. Really appreciate y'all joining me today. I need to remind you of a couple of key things. Number one, we have the market outlook this afternoon. Make sure that this is on your calendar. It will be hosted on both the Schwab network and the wholly owned separate third party and wholly owned by the Charles Schwab Media Corporation, the Schwab network that is, as well as the YouTube channel here. We do go live at 7 p.m. Eastern today for the 2026 market outlook. It's hosted by Marley Caden on the network. And you'll be hearing from our analysts, our senior analysts, that is. So you'll be hearing from Liz Ann Saunders and Kathy Jones and Michelle Gibley, kind of giving you the full rundown of 2026 expectations. So make sure that that is on your calendar, everybody. And for all of you, always a pleasure to have you joining me. Thanks for being here. If you liked the conversation today, hit that thumbs up button for me down below. We're going to get this one reviewed and archived for new attendees as well. Always great to hear from all of you. Make sure you're following Brent and me on X, and that you're subscribed to the Schwab YouTube channel here known as Trader Talks. I hope you all have a fantastic Thursday. I look forward to catching up with you again real soon.